Okay, coming to the next question. Next question is pretty straightforward, very easy question. The question is, distinguish between the capital budget and revenue budget. Explain the components of both these budgets. 10-mark question. Why this question was asked? Directly related to a syllabus of government budgeting. And as you can see in Mains 2013, we had another question related to government budgeting. That is with respect to critical analysis of the FRBM Act 2003. So let's discuss the content for the answer. It's very straightforward answer. So most of the students who have prepared the Indian economy from the perspective of prelims, all of these students would have written a very good answer to this particular question about difference between capital budget and revenue budget. But I will also tell you as to how you could have enriched your answer, apart from the basic points which everyone would have incorporated. So let me give you the background here. I hope all of you must have studied about Article 112 of the Indian Constitution, right? Article 112 of the Indian Constitution requires the government to present annual financial statement before the Parliament every financial year. What is the annual financial statement? Annual financial statement provides the estimates of receipts and expenditure of the government. That is how much money the government is going to receive and how much money the government is going to spend. So it gives us estimates of receipts and expenditure. Now, can you guess for how many years does the government gives an estimate of receipts and expenditure? Now, most of us think that the government gives the details of receipts and expenditure for just 1 year, but that is not the case. The government gives the details of receipts and expenditure for a period of 3 years. That's very important. For the previous financial year, the government gives details of actual receipts and expenditure for the previous financial year. For the present financial year, the government gives the details of revised estimates of receipts and expenditure. Question is, why is it estimates? When is the budget presented? 1st of Feb. When is the financial year going to end? March 31st. Has the present financial year ended? No. The present financial year has not ended. The present financial year will end after 2 months. So for the next 2 months, the government would have to estimate, right, as to how much is its receipts and expenditure. That is why, while presenting the budget for the present financial year, the government will give details of revised estimates and expenditure. For the next financial year, the government gives us the details of the estimates of receipts and expenditure. For 3 years, the estimates are given. For the past financial year, it's actual receipts and expenditure. For present and next financial year, it's the estimates. Apart from that, when the government presents the budget is presented under 3 heads: Consolidated Fund of India, Contingency Fund of India, and Public Account of India. These basic things you must be knowing. Now, one important aspect which you should know is Article 112 of the Indian Constitution itself mandates the government to separate the revenue account from the other accounts. So this obligation on the government to show its accounts under revenue and capital, it's not born out of parliamentary convention. It's a constitutional mandate. That is the most important point. So this was a point of enrichment which you could have incorporated in the answer in the introduction itself. That under Article 112 of the Indian Constitution, the government is required to separate its revenue account from the other accounts. Are we clear now? Now, broadly, what are the differences between the revenue budget and the capital budget? So broadly, I had discussed all of these concepts in last year's economic survey discussion. So as you can see, I had discussed about annual financial statement and all of these aspects. Apart from that, I had also discussed about the revenue budget and the capital budget. Let me quickly revise these things of revenue and capital in the next 5 minutes. Okay, it's a quick revision. Okay, I hope all of you are able to see the table on front of your screen. Yes. Okay. See, revenue account and capital account. since both of these two are accounts, they will have their own receipts and own expenditure. So revenue account will have it revenue receipts, revenue expenditure, capital account will have capital receipts and capital expenditure. First, if you see revenue receipts are considered to be non-redeemable receipts. Non-redeemable receipts basically means, first and foremost, that most of the time revenue receipts are recurring in nature. That means the government gets receipts on money on a daily basis, weekly basis, monthly basis, or a yearly basis. Apart from that, these receipts are considered to be non-redeemable because they are non-debt in nature. Non-debt means it is the government's own money. The government is not required to pay it back. That is why we call it as irredeemable receipts. As far as the capital receipts are concerned, capital receipts are those receipts which create liability or reduce the financial assets of the government broadly. So anything which reduces the financial assets or creates a liability on the government, we call them as capital receipts. Now let me just give an example. Now let's say the government is collecting taxes, direct taxes and indirect taxes. Can I say these taxes are collected on a recurring basis? Every year they're collected. Are they creating any kind of liability on the government? Are they debt creating? No. It's the government's own money. So all the taxes which the government collects, they will become part of the revenue receipts. So as you can see, you have both direct taxes and indirect taxes which are part of the revenue receipts. So you have taxes such as corporate tax, income tax, excise duty, GST, etc. Now, while writing the answer, one way of enriching your answer could have been with respect to writing the taxes in the descending order. As you can see, I have written these taxes in what? Descending order. So this could be one of the value enrichment points which you could have incorporated. Which tax contributed for the highest share last year? GST. Normally, in case of India, the share of direct taxes is higher than the indirect taxes, normally. But for the first time in the decade last year, the share of the indirect taxes was higher than the share of direct taxes. Apart from that, in case of India, normally corporate tax is higher than the income tax. But last year, the income tax was higher than the corporate tax. So probably you could have incorporated this as a enrichment point. Then you have non-tax receipts, interest receipts, dividends and profits, user charges, and external grants, etc. Let me explain this concept of interest receipts. Please focus here. Let's say central government is giving loans to the state government. For the center, can I say it will be capital expenditure, loans? For the state, it will become capital receipts. Yes. On these loans, when the states are paying interest, for the state, it will become revenue expenditure. But for the center, it will become revenue receipts. Are you getting this point? So when the center gives loans to states, it is capital expenditure. But when the states are paying the interest on those loans, it becomes revenue receipts for the center. So that is what is shown here. Next is user charges. User charges are basically the charges that you pay to the government, such as the fees for traffic violations, court fees, or best example could be your UPSC exam fee. So all of this are a kind of an revenue for the government. And next point is very important. Now please focus here. Now let's say you have World Bank. From World Bank, Government of India is taking loans. Can I say these loans are required to be paid back to the World Bank? So where will you put those loans that the government takes from World Bank? Capital receipts? Yes. Borrowings? Right? Now, from the same World Bank, let's say we are getting a grant, we are getting financial assistance. Are we required to pay back this financial assistance? Is it creating any kind of debt on us? No. So where should we put the external grants? external grants will be part of my revenue receipts. So please bear this in mind. External assistance, external grants, they are part of revenue receipts, not capital receipts. Clear with this? Similarly, capital receipts are pretty straightforward. Debt receipts such as market borrowings, disinvestment, recovery of loans, and so on. Now coming to revenue expenditure. What is revenue expenditure? Expenditure which is recurring in nature. That is, the government is spending money every month, every year, and so on. And this expenditure is mainly spent for the maintenance related purposes. For example, revenue expenditure would include the interest payments of the government, subsidies, salaries and pensions, defense expenditure, that is maintenance of defense, and then grants to the states for the creation of assets. Now, this is also very interesting. Please focus here, this part. Grants to the states for the creation of assets. Okay. Now, the central government is implementing a large number of centrally sponsored schemes, such as MG Narega, Pradhan Mantri Gram Sadak Yojana, Pradhan Mantri Krishi Sinchai Yojana, and so on, right? As part of the centrally sponsored schemes, every year, the central government is giving grants to state governments, right? Every year we are giving. Now, question is, where should you put these grants? Should it be part of the revenue expenditure, or should it be part of the capital expenditure? These grants are given on an annual basis, every year, recurring. So it should be part of the revenue expenditure. But ultimately, for what purpose this money is used by the states? MG Narega, Pradhan Mantri Gram Sadak Yojana, Pradhan Mantri Krishi Sinchai Yojana, can I say it is used for the creation of assets by the states? So question is, when the center is giving grants to states, should it be part of revenue expenditure or capital expenditure? It should, as per the government's accounting, it is now part of the revenue expenditure, not capital expenditure. So please understand, the centrally sponsored schemes, the expenditure incurred by centrally sponsored schemes are part of the revenue expenditure and not capital expenditure. One of the argument here could be that the center as such is not directly undertaking the capital expenditure. Who is undertaking the capital expenditure? The states. That is why one of the reasons for including the grants for the centrally sponsored schemes under the revenue expenditure is this. Okay. Yes, Rohan, grants during the disaster will also be the revenue expenditure. Okay. I hope all of you are clear with this. Okay, these are the basic things which most of you would have studied in your foundation classes. I just wanted to highlight some important aspects, particularly with respect to Article 112 of the Indian Constitution, which requires the government to separate its revenue account from other accounts. Second, I wanted to highlight about the external grants, that they are part of revenue receipts. Then this important aspect, that the grants that the center gives to the states for the creation of assets, it's not part of capital expenditure, rather it's part of the revenue expenditure. I hope we are clear now, all of you. So let's look at the suggested answer structure. So as far as the question is concerned, the question is very straightforward. You just have to distinguish between the revenue and capital budget and explain the components. So in the introduction, you could have started with the constitutional provisions behind the budget. That is about Article 112. And then in the body of the answer, you could have highlighted the broad difference between revenue and capital budget, and then the components. As far as the components is concerned, you could have incorporated the table which I had shown you before. And then in the conclusion, you could have concluded with the importance of budget. For example, one way of concluding the answer to this particular question could have been that budget is not just a tool of receipts and expenditure. Budget is also a tool to promote economic growth and development. For example, now the government is focusing a lot on capital expenditure, capital budget, in order to give a fillip to the Indian economy, revive the animal spirits, so that we are able to come out of the present economic slowdown. Okay, clear now? So as far as the value enrichment point is concerned, one value enrichment point, as I told you, is about Article 112. Apart from that, another value enrichment point could have been about writing the taxes in the descending order. Okay. So this is the answer, suggested answer. So as you can see, in the introduction, we have started with Article 112 of the Constitution, requires the government to present the annual financial statement before every financial year. And the annual financial statement should distinguish the expenditure or revenue account from other expenditures, then the body, and then the conclusion of the answer. Are we clear now, all of you? Yes. Okay, let's move on to the next question. Okay, as far as the source mapping is concerned, as you can see, this is a screenshot of the last year's economic survey. In this economic survey, I had discussed about the components of revenue account and the capital account in detail. Everything was covered in last year.